What's going on, YouTube? I know I'm a little late on making this video, but overall I'm here now, right? So current net worth of the portfolio is $391.42. I made a deposit yesterday. I deposit almost every 23rd and every 8th of the month, so pretty much $200 each month. I know in my last video I was talking about if I should split up how I invest on a monthly basis. Should I just do $50 a week? Should I just stick to my $100 every 2 weeks per month, right? If that makes sense, every 2 weeks, 2 times per month. There you go. But I really haven't really made a decision on it yet. So far I'm just gonna stick to what I'm doing now, $200 a month, sticking to it. But yeah. So if we go to the investment pie here, I'll let it load here for a second. So from year to date to start in this portfolio, we're currently down 4.27%, which translates to $8.36. We have made a total of 31 cents in dividends. If you see in the top right here, like I said, I did deposit the money yesterday. I didn't transfer it in today or this morning when the market did open, but it is going to be out for transfer tomorrow morning, 8 o'clock like usual, or 8:30 really. But other than that, right now, I'm not upset at the portfolio. My mindset is really just getting in and getting started. Like I said, I'm only in it for almost 2 months now, or not even 2 months. Well, yeah, almost 2 months. November the 5th will make it 2 months. So yeah, we're in a month and a quarter, 2 quarters, right? My risk tolerance, I can say I can sleep at night with this portfolio. Understanding that there are investments in this portfolio that are gonna take me to the moon. Let me not say to the moon, but I'm very confident in each and every one of my investments, and I don't have no problem selling anything if anything was to pop up, right? So if we go in the let's do the last week, right? So last week we lost $10 on the portfolio, which translates to 3.43%. And that was, I would say that was a hard week. That's not the hardest week I've had. I don't think, at least. I really don't pay attention to weekly. I mainly pay attention to my year-to-date starting this portfolio. But on a weekly chart, as you can see, we're down, 3.4%, which translates to $10, right? My mindset right now on that number right there, I understand it isn't a lot, right? In percentage wise, it's not a lot, right? And the more I invest into this portfolio, the higher that dollar value is going to get, right? In negative, but this percentage will never change. It'll either be 0%, 100%, or we're in the green, right? So I mainly focus on this percentage number more than the dollar number. I'm slowly transitioning. Of course, I'm not 100% in there. Losing $10. Doesn't upset me. Let me say it like that. It doesn't upset me, but it's like, what could I use my $10 on, right? If I didn't invest it, right? But it's only $10. It's not much at all. But let's just say we have $30,000 in this portfolio. Then that'll be somewhere around $100, maybe $1,000 if I do the math right, right? So I'm really trying to build up my confidence throughout these years of investing. Continuously invest nonstop, really, as long as that I'm investing not correct, but what's the word for it? Proper companies, if that's appropriate for this conversation, right? Companies that can build themselves up from where they are now to 5, 10, maybe 20 years into the future, and pay me dividends so I can slowly live off those dividends and even reinvest those dividends to even live off it more. So me, my kids can, hopefully they don't sell it all, but they'll live off the dividend too, right? Nobody will be homeless as long as everybody, puts in their fourth effort, right? But I'll go back to the year to date now. I actually want to pull this up. So if we look at the S&P 500 really quickly, my game plan is not to beat the S&P 500. My game plan really is just to be near it, right? I don't want to underperform by a lot, and I of course I want to overperform the what's it called, S&P 500, right? So if we go to the month, last month, S&P 500 was down 2.07%, and if we do that here, as you can see, the portfolio was 1.83%. So we technically beat the S&P 500, right? And then if we go from year to date of when I started this portfolio, so September the 5th to what is that? September the 5th to now. So let me see what September the 5th right there. So I don't know if you can really see that number, but that number is just 5.54%, right? If we go to, like I said, the portfolio here, we beat the S&P 500 again, right? It's not my game plan to beat it, right? I don't have much money invested into this portfolio. I completely understand that this is like pennies, chump change to some people. This is how much some people get paid in dividends on a monthly basis, right? But you got to start from somewhere, right? And if you can do good with a low amount, you can do good with a high amount. That's my thought process on this, right? But yeah, so I pretty much use S&P 500 as a guideline to where my portfolio needs to be, and if I'm off by a percentage that doesn't fit my risk tolerance, then it's time for me to reevaluate the investments that I have in my portfolio, right? Right now, there's only one investment. I'm not gonna say I can't sleep on it. I've been doing it for the past month and a half, right? But it's a little bit of a tricky one, right? I wouldn't say tricky, but it's a little bit of a hold it, so sell it. What's going on with it? Is it a smart play? Is this just me putting money into something that is literally pointless, right? And that's 3M, right? Currently, 3M is down 11%. I think that's year to date of me investing into it, but that's only 28 cents, right? Of course, my 28 cents is better else somewhere else, right? Into Apple, Microsoft, Lockheed Martin, Costco, Home Depot, so on and so forth, right? So my buying price on 3M has pretty much averaged out to $97.67, which before was at like 106, 110. So when I bought for the second or third time, it's just been dollar cost averaging, right? And my game plan with this portfolio is to dollar cost average, right? I don't know if earnings came out today for 3M. I gotta check again. I don't really remember. It was either today or tomorrow that earnings are gonna come out. But yeah, so pretty much 3M is the only stock that I'm really just, I won't even say iffy about. I want to hold the stock. It is a great, what they call a dividend king or dividend aristocrat. I think that's the right word for it. It's just the lawsuits is the reason why this company is currently in the red by so much for me and so much for other people, right? But I think if I can stick through 3M, and the company's evaluation is actually makes sense for me to actually hold it, then I think I can hold anything in this portfolio, right? 3M isn't a bad company in my eyes. I think they can survive, but I did reallocate from 10% of my investment into this slice of the pie. I went from 10% to 5%, just reallocated due to the lawsuit that they had, and everybody was selling out. I'm not gonna lie, I was having FOMO, if that's the proper word, but I was gonna sell as well, right? One lawsuit almost made me sell 3M completely, right? It's not a big holding on my portfolio, no, but if I can't even hold one lawsuit and the company will survive in the future, that's just gonna look bad on my part. That's my thought process on it right now, right? But everything else, Caterpillar's down 12%. I really don't know why. I gotta check that out and see what's up with that. I don't really know why they're down 12%. I can probably do some research on that later on tonight. But other than that, like I said, 3M is the only stock that I just, it's like here and there. Like, do I put more into it at this lower price, or do I just leave it as is, right? But other than that, over here in my tech category, from year to date to starting this slice of the portfolio, we're down 2.27%, which translates to 71 cents. Here are the percentages we're down on these few companies, of course, right? And we actually got 1 penny in dividend from this company, and it was from Intuit. I actually gotta check when Apple and Microsoft is coming. Their dividend is sending out. I really don't know, to be honest with you. But Intuit 1%, or sorry, 1 penny from Intuit is what we got back. That's literally like nothing to some compared to some people, but it's progress for me, right? I take that 1 penny as like, wow, this actually works, right? I made 1 penny from doing absolutely nothing but hitting a buy button and putting in $100 into this portfolio. All right, so this is just me. What's the word for it? It is proving, not the market, but it's proving that it works. This not strategy, but investing in dividend stocks works, right? Instead of being invested in one stock like pretty much S&P 500, I am investing in a lot of individual stocks, which pretty much levels out the playing field of me investing in just one ETF. And, of course, it's not going to drop 20-30% like a normal stock would, but, it gives me a little bit more leverage, if you want to call it. And my thought process on investing in individual stocks, or not my thought process, but my risk management builds up over time when investing in these single stocks, right? But back to the dividend, right? It just proves proven concept. That's where I was looking. Proven concept, right? So if we go to, so that was our tech finance. My finance is pretty much nothing but banks and S&P Global. These stocks are kind of down, not pretty low, but they're down 10%. Our S&P Global is down 10%. American Express 8, JP Morgan 3, and Mastercard is 5% down, right? So currently we're down 7.18% on this slice of the portfolio, which translates to $2.56. We actually earned some dividends from this one. JP Morgan paid us 5 cents. American Express paid us 3 cents. Brain fart. Not micro center. Jesus, it's right in front of me. Mastercard paid us 2% or 2 cents, right? So total of 10 cents in total in dividends, right? Proof of concept, right? If you're thinking about investing in dividends, go ahead and do it, right? Of course, it's not financial advice, but do it at your own risk. It takes time to build risk management. It takes time to learn different swings of the market, and different types of stocks that you even want to invest in, and getting an understanding on what you're really investing in, right? It takes time and practice that, I'm even learning to this day, right? I never invested in dividends. I never went straight for dividends. I did day trading before, NFT trading before. I've also done, what is it called? Options trading before. Not really looking into dividends, right? But now I feel dividends is the place I need to be. I'm not very good of a day trader. I made a few $100s a day trading when I was a lot younger, and things happen. Didn't make it out all the way. Took the profits that I did have then and went on about my day, right? But I feel like dividends will actually help me to that path of wealth, financial freedom, and I don't know if this is the proper term, but financial literacy. I think that's the proper term. I don't really know, to be honest with you. But yeah, moving on from that, going to our finances. So if we go to our consumer now, which my only 2 consumer stocks right now are Home Depot and Costco. From year to date, to start in this slice of the portfolio is 4% at 4.86%, which translates to $2.01, right? Costco has not touched red but like once or twice in my portfolio, and I think I recorded it once when it was red in my portfolio. But other than that, Costco's been a decent buy for me, right? That's why it's 60% of my portfolio, or this slice of the portfolio, right? And Home Depot's right underneath it with 40%. I don't think I'm going to add any more consumers to it. I know Lowe's is a close second to Home Depot, but I feel like Home Depot is the better option, and I don't really want to overlay like I did with my ETFs before. Overlay in stocks. I think Home Depot's the bigger one of the what do you call that, moat? I think that's the correct word for it. They have the bigger moat than Lowe's does. And yeah, that's really my thought process on it, to be honest with you. It's just Home Depot, right? I'm not going to go into the financials on exactly why I'm invested. Just know that the amount of money Home Depot makes and the amount of dividends they pay out is something that is sustainable in my eyes. And I feel like if I invest in this company long term, I'll make pretty decent money from them long term, right? That's my whole game plan on this portfolio. Everything's long term. I don't expect to sell anything a week later unless I just have a big change of mind on something that just didn't fit right with me, right? But moving on from there, we go to our industrials. We touched on this a little bit. 3M is just one that I reallocated the percentages on, and pretty much I still feel confident that they can get out of this lawsuit situation, and I'm gonna just keep investing into it until I feel like this is just a dead end, and either take the loss or take the profits, right? If we go up here at the top real quick, so the dividends we have made is 10 cents from this portfolio, 8 cents from Caterpillar, 2 cents from Waste Management. I think, Lockheed Martin is my biggest holding in this part of the portfolio. Waste Management a close second, and then Caterpillar will be the close third, and 3M is just in here until I feel confident to giving it more of a larger percentage of the portfolio, right? Only thing about this slice of the portfolio that I might change is waste management and Lockheed Martin allocations. I may swap the two, so Lockheed Martin, instead of having 38%, waste management will have 38, and vice versa for waste management and Lockheed Martin. I think waste management is more of a controlled asset in my eyes. Yes, it's down 2% currently. That's just one stock that I just bought at a kind of not a high evaluation, but I really didn't look at the evaluation before I bought it. Say it like that, right? And I'll touch on the evaluation here in a second too as well. But yeah, that's the only thing about this slice of my portfolio that I might think about changing. Other than that, happy with everything I'm holding here. Pretty much dollar cost averaging, trying to make profit off of dividends, and market gains aren't really my main focus right now, right? So going down here, our ETFs. If you watched my previous videos, you know that I had QQQ, triple Q. If I said an extra one, what's it called? I was holding that one. It's more of a not a stock ETF, a tech ETF. I think it's like 49% of it is completely tech investments. I really didn't want that in my portfolio because, as y'all saw, my tech slice in my portfolio currently, I don't really have many tech. It's only 3 tech companies in there that I feel confident in holding, and I don't mind the fluctuation of their stock price going down 15-20% because I know they're good companies. Only reason that I'll sell is for bad management, a halt in cash flow, anything major like that, right? But other than that, right now holding SCHD, SPY, and VOO. One of you guys in the comments let me know. I wouldn't say I already knew it, but I did some research on it. Not to sound arrogant, of course, but I knew that VOO and SPY, the main difference between the two was the what was it? What is it called? Expense percentage or something like that. I forgot what they called it. Tax expense. I forgot what it was called. Sorry. Yeah, one is higher than the other, and I think SPY has a higher tax or percentage cost, whatever it was called. I completely forgot, but you do your own research and you'll know what I'm talking about. That one had a higher percentage that they took out after you sell or something like that, and the main reason I'm holding the both of them is because they don't really make a huge difference between each other, right? One may be up 5%, another one may be down 4%, right? Or sorry, down 5%, another one may be down 4%, right? They're not too far apart, right? SPY is down 56 cents, VOO is down 58 cents, and they both practically are a penny different from each other, right? So they're damn near close to the percentage wise, cash wise, on how much they're down and up, right? There's no difference between their holdings at all. Some allocations do have higher than others in each of the ETFs, right? So they are overlapping currently. I just don't know which one I want to hold for the long term, right? I'm confident in both of them. Yes, it's overlapping, but I don't really see the problem of those two overlapping. It's an ETF, right? The percentages are going to be different for both of them on what their holdings are, and one may have a better opportunity than another percentage-wise, right? It may crack down to the penny, as we can see, right? But other than that, confident in these holdings of the ETFs. If we go to the dividends here, we have been paid a total of 10 cents in dividends, 4 cents in from VOO, and 6 cents from SCHD, right? But yeah, other than that, let's go back here to the pie again, just to recap. We're down currently 4.27%, translates to $8.36, and just heads up as well, if you're interested in this type of platform for your dividend investing, there will be a link in the description. While I sit here, I'm not going to transfer, actually I'm going to buy. So I'm going to go ahead and put this $100 investment in now. So in the morning, I don't have to wake up at 7 o'clock, which I already do, but do it now than later, and put the buy in for in the morning. So a $100 buy will execute in the morning for me. So then I'll make the portfolio actually $391, the actual net worth, instead of me holding that in cash, really. And yeah, but back to the evaluation. I was going to touch on that before I end the video here. Evaluation. So I watched a few videos on how to do evaluations, what are the best or who are the best who made the best equation to figure out the evaluation of a company, and also finding the intrinsic value, if I pronounced that right, of a company, right? So my thought process on evaluation right now, I'm kind of, I would say I'm not worried about it, right? Of course, I don't want to buy a stock for a premium price for no reason, right? But I don't really use evaluation on all stocks that I'm looking at to purchase, and we can actually check it out here. This is Qualtrim. I don't know if y'all know the YouTuber Joseph Carlson. I think that's his last name. Sorry if I butchered that, but he made this app, $10 a month. I like it. It's very eye appealing to me. I can really understand everything that I'm looking at, and we can actually touch bases on one stock here, Vici, right? I am going to get into some real estate stocks here soon. Don't know when I'm going to add them. I'm going to wait a little bit longer before I add any real estate stocks to my portfolio. But yeah, so it's just eye appealing to me for doing research on stocks, understanding their cash flow, net profits, how much dividends they pay, quarterly or monthly, however they do it, for the stock itself, of course, and pretty much, their outstanding shares, so on and so forth. You can see everything here, right? I think this is a worthy investment of my $10. This is just this is what I use as my watch list to figure out what stocks I am going to invest in. But like I said, with evaluations, like I said, I don't want to buy a stock at a 5x evaluation where it doesn't deserve a 5x evaluation, right? I'm mainly buying stocks that I feel, no matter the price, let me not say no matter the price, because I still take the price into account, right? But no matter, whatever the fundamentals of the company is, does that exceed what the current price is, right? So, for example, Vici, real estate company, invests in a lot of Las Vegas real estate, and pretty decent investment company like all the other ones, right? Currently at $27 a share, which is a very cheap real estate company, and a newer one actually as well. So yeah, moving on. So evaluation, right? $27.95. Do I feel like that is a comfortable? Not comfortable, but is that a number I'm willing to pay to even own this company, right? Do I feel like Vici can go from where it is now and exceed $100, even though this may be its highest evaluation, right? That the fundamentals of the company exceeds its current stock price, right? That's what I mainly look for in doing evaluation. I don't feel like, if I was to do evaluation, I think I'll still be sitting here waiting for stocks to get at a certain price point, right? And evaluations don't always work out, right? You can do an evaluation on Nvidia, right? What's Nvidia current stock price? I don't even know their stock ticker, but Nvidia, let's see. Is that right? No. How do you spell Nvidia? Nvidia. Nope, I spelled the same thing. We'll figure it out later. But no, let's go to Apple, for example. Apple, right? Apple, we all know, best top 3 tech companies out there, right? Top 5, let's say it like that, right? Everybody is invested in Apple. If you're not invested in Apple, why aren't you? Is a real question, right? Non-financial advice, of course. But, for example, the fundamentals of this company, can it exceed the current price it's at now, right? If we go to my tech portfolio here, we go down to Apple. I know I bought Apple at a pretty high price. I think the first time I bought it was at like $185, $190, and of course our dollar cost average from there, since I've invested more than $200 in this portfolio. Pretty much my average price of Apple is $179. The current price is $173.44. But let's just say the intrinsic value, or the valuation of this company at $173 is its max price, or like that's way too high to buy in at, right? Would you invest in Apple, or would you wait until market swings before you invest in Apple, right? This may sound very a very immature way to invest. Get in where you fit in, right? But I feel like this is the most, not comparable. what's the word for it? I feel like this is the most beneficial thing to me, right? Getting in now instead of waiting 2, 3, 4 weeks of Apple to get it to that intrinsic value or valuation that I feel comfortable buying in, right? I feel like Apple's fundamentals, the moat of the company, it's very exceeds the stock prices at currently, right? Can Apple be overevaluated? Of course, any and every company can be overevaluated. Their stock price can be overevaluated, and the market will hit everybody good understanding saying, why are we paying so much for a stock that does bullshit, right? Sorry for the language, but that's just my example, right? But back to the point here, I rather get in now than wait later. And dollar cost average is my main focus on this portfolio, right? So if we go back here to my watch list that I got, like we saw earlier, this is just my main portfolio. See all these stocks here. This is not my watch list, but this is the watch list here. Few of these stocks are some things I'm looking at, and I feel like I can get at a lower price, and that's what I'm going to try to do. But at the same time, if I feel like the fundamentals of the companies is just decent enough just to get in, and I don't mind if I go 10, 15, 20% down, I still dollar cost average that percentage that I am in the red in if it does go down lower, right? Would it be better to buy at its lowest? Of course, but nobody really knows the lowest for each and every stock, or any stock in that case, what their proper evaluation is, right? We all have our own ways of investing. We all have our own ways of pretty much figuring out the evaluation, right? So currently my standpoint on evaluation of stocks is neutral, not saying that it's bad and not saying that it's the best, right? Just pretty much get in where you fit in is on my thought process, really, right? But other than that, as you can see, just one more time, this is my watch list. So these are some stocks that I am looking to invest in, possibly, right? If I see anything that doesn't fit my requirements or my risk tolerance in investing, do I see myself investing in this next 10, 15, 20 years? I'm not going to invest in it, right? So that's why they're here now. All right, but maybe next video when I invest, you may see some new stocks in my portfolio. Maybe you'll see these. Maybe you see some new ones. I don't know, right? I don't know if I'm going to make a post on me adding new stocks to my portfolio because I don't really want to be a stock caller or saying I invested in this new stock. Here's why. I don't think I'm gonna be that type of person. I'm just here to bring you guys along with my journey, and hopefully you join me with your own risk tolerance and with your own risk management. Of course, this is not financial advice again, but do better for yourself, right? As I am. Some of you guys may not agree with most of the companies I am invested in. Some people may agree totally what I'm invested in. I'm not here to make you happy. I'm here to make my pockets happy, right? But yeah. Other than that. That's pretty much it for the video. I tried to make it a little bit shorter, but it came out to be 30 minutes. Make sure y'all like, comment, and subscribe. Whatever you comment, I do respond. If it's not foolishness, of course, right? If you got any questions for me, ask them. If you got any advice for me, tell me, right? I want to hear the criticism. I want to hear what your thought process is. Do I sound like a stupid 19-year-old just talking on the mic right now about investing, right? Let me know what I can do better for content wise and investing wise, right? But yeah, other than that, I'll keep y'all up to date. We will have 16 buys tomorrow morning at 8:30, and that's the plan, to just let that money flow, let the dividends come in, and other than that, like I said, like the video, subscribe, post notifications so you don't miss any more of my investment updates, and I'll see y'all boys in the next one. Peace out.